I'm sitting outside of one of my listings at 316 Sunrise Crescent in a great neighborhood, but I want to talk to you today more specifically about mortgages. And I've brought someone with me who is fantastic at telling you all about mortgages, and today he wants to tell you about the difference between a bank and a mortgage broker. Hi, I'm with Ryan Wood from Limestone Mortgages, and we're trying to find out what is the difference between a mortgage broker and a bank. So can you explain what the differences are?
Sure. Well, there's a lot of different advantages to having a mortgage broker rather than going into the bank. So one of those is really just the flexibility. So we've got access to over 50 different banks, credit unions, and different lending institutions. And so having access to all of those different lending institutions gives us a lot more flexibility. So we're able to shop the market for the client to not only find the best rate, but also find the best mortgage product for the client. So an example of that, where that would be an advantage, would be if a client's paying child support or spousal support. What most banks will do is just add that support payment into their liabilities. But there's a few that will actually allow us to deduct it from the income instead, which can be quite beneficial for the client and mean the difference between being approved or not approved. So.
Fantastic. Yeah, and what about credit ratings you mentioned?
Yeah, so with credit bureaus, obviously you need a credit bureau to get the mortgage. And so if you're shopping around and going from one bank to the next, each time you go there they'll pull the credit bureau, which can eventually bring your credit score down. So what we do is just pull the credit bureau once, and then it's anytime we go from one lender to the next, we're still using that same credit bureau, and helps keep the score up. So
fantastic. Thank you, Ryan,
You're
and
welcome.
we'll be back with Ryan in future episodes.